Jenny, let me just turn to you because you said a very important point. Investors need returns and need exits, but Asia's capital markets are not there yet. Serena, you referred to the vigor of liquidity, which is not there yet in this region. Jenny, how do we get there?
For all of you who's been long US, buying to US, not just on the public side, but also on the private equity side, you've seen great returns. And one of the key reasons is that in the US, in terms of entrepreneurship, there is a closed loop from private enterprise to public capital, where the money being invested in at Series A, B, C goes and comes back in full cycle when those companies got public, and managers, fund managers can plow that capital back into the ecosystem. So I think in Asia, we have part one of two in process. And that part one of two is essentially when you look at managers like ourselves, we've been invested in the region for the last 10, 20 years. We've been looking, investing, and helping to grow the Series A, Bs, and Cs. But what is ultimately missing is part two. The region has a nascent capital markets in formation. I think thanks to what India has done last couple of years. Japan, I think, has shown us that it is possible through reimagining how capital markets is going to look like, to say, is it policies? Is it stitching capital markets together? Is it rethinking about listing criteria? And so it's not a single bullet that can fix the issue, but it's really about supply and demand. How do we bring good issuers? And I use this Taylor Swift of IPOs, right? You need to have many, many IPOs, but you also need to have like the one or two key ones. I love to have an Elon Musk in Asia that we can all talk about every day, right? That is the heart of innovation that's driving great companies. So on one hand, we need all these great issuers who wants to stay here, right? You make it here, you expand here, you go international, but you want to stay here. And then on the other hand, I think the capital loop needs to come. But all that needs here in Asia, because it is a very disparate region with different countries, different currencies, I think we need to rethink how this is going to happen. With the world in a more, clustered geopolitical situation, many countries, many governments are thinking, how do I do more to keep this innovation, this capital back in this region? If you are looking not just at 1, 2, 3 years of asset allocation, but you're looking 5, 10, 20 years to capture the growth from this, fastest growing region in the world, the fastest growing middle class in the world, then I think there has to be more that can be done here in the region.
In terms of build it and they will come, Kabir, and Serena, if I can turn to you, would you agree that we are almost halfway there in terms of the necessary capital market structure in this region that will really galvanize the exits and the IPO mood?
I think a bit of yes, a bit of no. I think there's, on the yes side, the supply of quality companies on the private side is starting to kind of build up. I think on what needs to be done on the capital markets, I think good learnings from India, $5 trillion market cap from a public market standpoint. And you've seen a lot of retail and family office participation. Like every month you have what's called systematic investment plans, and that was taking about $3 billion per month of retail investor pool, and that created enough liquidity where you've had some very successful IPOs, may not be the Taylor Swift of IPOs in India, but you saw a lot of very successful IPOs like Zomato.
But for the record, the Taylor Swift of IPOs would be $10 billion plus.
You need
That's
to
what
be
we need to see.
The greater than $10 billion plus type of IPOs. I think here you need, and if you look at market caps of SGX, Indonesia, between the $700 billion, $800 billion type of mark, you need more liquidity. And I think India is showing a bit of the way. There start to be interesting listings in Japan. I'd say you need a bit more broad-based listings in whether it's Indonesia, whether it's Singapore. I think that should happen hopefully in 2025.
I have a little bit of a different view.
Sure.
I think you need to rethink equity from the point of view of how you invest in equity as a broad-based asset class. Not public, not private, but as one broad-based asset class. So what you would want to see over time is that your investors are able to tokenize the private market side of equity and trade it with the same insight and information as you would a public market stock. Because what you see in the US today is you have less than 4,000 listed companies. 1997, you had 7,000 listed companies. In 2024, 25, you had 4,000. So the reality is you have to move into the private market space. Equity is just a broad-based asset class. I think there's going to be significant innovation in this space which will allow participation. And the next generation, Generation Z, Alpha, Beta, the new generation that just started in 2025, will not have the baggage that many of us in the room have with regards to public versus private, especially in a region where we all have our own various stock exchanges. Very difficult to consolidate. We've tried it before, and ASEAN Exchange hasn't worked out so well. So that's where I think the innovation is going to come from, and that's truly going to create the liquidity required for private markets in our own region.
And in terms of the stakeholders that would build what could be an Asian NASDAQ, we need the regulators, we need the index providers, we need the institutions, we need all of the above. Where are we on generating that thought leadership and generating that momentum, do you think?
I think it's starting. As Jenny also mentioned earlier, you have the regulators coming into play, but you need the big asset managers coming in and bringing all these players and asset classes to then also introduce it to the different investors, so that it's not just public markets and fixed income, it's about how you can invest in private markets, and it really truly does create this long-term investment return. So I'll just quote from Howard Marks very, very quickly, right? On an annual period of a reference portfolio, a private market portfolio might look like a 24th percentile return. Over a 14-year period, that same portfolio will have a 4th percentile return, right? So to Jenny's point, with private markets, you have to have a little bit more longevity, a little bit more patience, so that you generate this alpha return.